I'm Rob West. I run Thunderset Energy. We're a research consultancy into energy technologies. We help to answer the question, what would you invest in if you wanted to drive the energy transition forwards, and how can you make a return doing it?
What is the energy transition?
So the energy industry is going through its greatest ever period of change. It's all driven by technology. And we refer to this period of change as an energy transition, but it's actually 5 energy transitions all happening at the same time. These are not billion-dollar opportunities, these are trillion-dollar opportunities. And really, these opportunities are the only way that the energy transition is going to happen. And let me explain what I mean by that. If we take the energy system that we have today, we need to transform it. We need to get rid of all the carbon. And the technologies that do that are going to have to do various things. The first thing is they're going to have to make energy better for consumers than it currently is, because nobody's going to get behind technologies that make their lives worse. The second thing is they have to be economical, because this is an industry that spends $2 trillion a year. And if you can't compete for capital in this industry, you're just not going to move the needle. And the third part is about technical readiness. So, technologies, people always joke that technology means something that doesn't work yet, but it has to be close enough to working that within an investable time frame, you can actually put meaningful amounts of capital into it and make a return on that capital. So there's a well-known scale which we have, which is called technical readiness level, or TRL. And worth going through this just up front because it might come up later in the conversation. But you should think about this as like the Richter scale of assessing technical readiness. TRL 0 is a glimmer in the eye of a scientist, and TRL 9 is something that's fully ready, fully commercial, and you can buy from industrial conglomerate off the shelf. And so when we do all our work on energy technologies, we're looking for things that meet those criteria. It's got to be better energy, it's got to be cleaner energy, it's got to be economical, and it's got to be TRL 7 or above to really get excited.
Why is decarbonization so difficult?
Why is decarbonization so difficult? It's because of the size of the energy system. So this is an energy system that consumes 63,000 terawatt hours per year. And to put that in perspective, this is like a small kitchen toaster running 24 hours a day, 7 days a week, 365 days a year for every single man, woman, and child on the planet. It's enormous. And not only that, the energy is used in ways that can just be so hard to see as a consumer. We think about driving, passenger cars, as a big source of emissions. It's 14%. It's the biggest source, but it's only 14. And actually, if I was going to add up all of the components of the energy system that are more than 1% of global emissions, I would have 35 different things on that list. It would include things like cement, which is 8% of emissions, or agriculture, which is about 13%, or making metals, which is about 10%, or making things like ammonia in order to make fertilizers. And so if we end up without enough energy, actually it's in the stuff that we're going to see problems. We're going to see big inflation in the prices of stuff that really matters to the 7.5 billion people in the world. So it's the size that makes it difficult to decarbonize. It's the hiddenness of it. And finally, it's the fact that energy demand is still growing. We have this sort of two-tiered energy market. We have the developed world with 1.3 billion people who consume 60% of all the world's stuff. And we have the developing world, which is almost 6.5 billion people who consume the other 40. And just to put that in perspective, relative to the oil market, in oil, the developed world is 13 barrels per person per year. In the developing world, it's 3 barrels per person per year. And so as those 3 barrels go to 4 barrels, by 2050, not to the 13 we have in the developed world, but just from 3 to 4. And as populations in the emerging world go from 6.5 billion to 8.5 billion, we're going to end up in a world where this 60,000 terawatt hour energy system becomes 120,000 terawatt hour energy system. And really efforts to stop that, they might not be the route to decarbonization, they might end up being the route to real devastating consequences. So we need to get more energy into the world, but we need to completely clean up and decarbonize this energy industry as we do it. And technology is the only way.
What is wrong with the divestment movement?
So I think divestment is absolutely not the right way forward to achieve an energy transition. And really the first way to think about it is just logically. I mean, if we want to improve global healthcare or life expectancies, nobody thinks this would be achieved by pulling out all of the capital from the pharmaceutical industry. If we want to improve education, nobody thinks this is going to be done by cutting funding for underperforming schools. There's this general principle that in order to affect meaningful change, we need to divert capital into things, not away from them. And we'll talk a bit more about how that pertains to energy as we go. But really the point that scares me the most about this divestment debate is that if we do this and we pull capital away from the energy system, what's actually going to happen, right? And so let's go through that chain of logic. The idea is, well, we have companies that are investing in fossil fuels, and what we're going to do is we're just going to restrict capital access until they can't invest in fossil fuels, until the supply goes down. And then when the supply goes down, the price will have to go up to the point that somebody's going to get priced out of the energy system. And again, if you're talking about the 1.5 billion people in China, or over 1 billion people in India, or over 1 billion people in Africa, and your solution to climate change is we're going to price these people out of the market, I don't think you have a route to decarbonization. I think you have a route to war. And so, what we need to do is, as I was saying earlier, get better energy into the system that can meet the energy needs whilst decarbonizing at the same time.
What is better energy?
So renewables are a huge part of the shift to decarbonize the energy system, but it would be remiss to say that they are the whole part. And this is actually not so much an argument around opinions, this is an argument just around simple arithmetic. So we talked about how the energy system by 2050 is likely to be 120,000 terawatt hours per year. And we're currently growing renewables at a pace of 270 terawatt hours per year. So 120,000 total, and we're going to build renewables at a pace of 270 per year. This is going to take 400 years. So my numbers, I have new technologies improving renewables to attract more capital. I think we can grow at about double the historical rate. But even then, we're only going to get to 15% of the world's energy by 2050 on that cadence and that trajectory. This is clearly not going to be the whole picture. So you end up at the position where other things are needed. There are other aspects of renewables that mean it can be hard for them to substitute for very, very energy-dense forms of energy like planes or industrial heating, and we could talk a bit about that too. I'll give you an example that I think makes this clear. I was doing some numbers on could you run a Boeing 747 on batteries and powered with renewables, and the answer is you could, but you could only fly the Boeing 747 90 miles before it'd have to land again. And this is just the realities of running a combustion vehicle with batteries at 200 watt hours per kilogram of energy density compared to jet fuel that's about 12,000 watt hours per kilogram of energy density. These are the sorts of things where if you want to power a jet plane or a glass furnace at 1,500 degrees centigrade, you're going to need fossil fuels in this energy mix. And so this brings us on to the question of, okay, so how do we decarbonize these fossil fuels?
Cleaning up dirty energy.
Let's go back to this 2050 energy system. Let's talk about the CO2 intensity of it. So right now around the world, we're emitting 40 billion tons of CO2 per annum. By 2050, if we do nothing, we're going to be at 80 billion tons of CO2 per annum. And so we've got to fix this. We talked about renewables and how renewables can take out 15% of that total and decarbonize it. So what are the other options? Well, one is nuclear, and I have small growth in nuclear coming through these numbers, but nothing game-changing in terms of technology that I can build into a model yet. We've just gone through 20 next-generation nuclear technologies, and there are some really exciting things happening here, but they're currently at TRL 4 and 5, not stuff that you have a physical commercial demonstration plant running that you could see reason to build it into a model. So there's a tiny sliver of help there, but not much to really change the picture. Then we get into the biggest opportunity on current technologies, which is natural gas. So burning natural gas is 30 to 50% less carbon than other fossil fuels. So on my numbers, by 2050, we got to turn down coal, especially turn down carbon-emitting coal, and we got to meet as much of the fossil fuel needs as possible with natural gas. And actually, on my numbers, natural gas trebles in terms of the total demand between now and 2050. It should be the fastest growing energy source. And if we do this shift away from the current mix of fossil fuels towards gas takes out 20% of the total emissions of that 80 billion ton per year energy system. So on my numbers, on today's technologies, the shift to gas can have a bigger impact on total CO2 than all of renewables. And this is just a key reason why we need to engage with the energy industry and get this shift to happen, rather than just pulling out and leaving it to its own devices. So that's the first component. Now let's talk about oil. I mentioned earlier that oil is going to go from 100 million barrels a day to 130 million barrels a day on the current trajectory because of population growth in the emerging markets and rising oil consumption per person. Now, with all the technologies we've looked at this year, I think you can take out about 45 million barrels a day of that total oil market. To say that again, on current technologies, we'd end up at 130 million barrels a day. We can take out 45, which is equivalent to all of the developed world's oil consumption, but we'd still be left with 85 million barrels a day. And this is equivalent to 1,000 barrels of oil being burned every second. And this is stuff like the Boeing 747 example that is just really difficult to substitute. So what do we do about this? There's an answer that is becoming clear to me, which is we have to take this oil consumption and make it as low carbon as we possibly can. And this is doable. I think we can take out 20% of all the oil industry's carbon. And here's how. If you take the average barrel in the industry today, it's about 60 kilograms of CO2 to find it, develop it, produce it, ship it, refine it, and commercialize it. So the whole chain. There's an enormous skew. Some of the barrels in the market today have 100 to 200 kilograms of CO2 per barrel because they're very, very heavy oil, or they're in countries that can't control their flaring, or they're in countries that are not overseen by efficient companies with Western standards. And we need to drive that oil out of the market. And the way to do it is to scale up the low carbon oil. So what is the low carbon oil? Well, the best new fields being developed today have something in the range of 20 to 30 kilograms of CO2 per barrel, all in. You've just seen a huge, fantastic field start up in Norway called Johan Sverdrup. This has got the lowest emissions per barrel of any field ever. The upstream component is just 1 kilogram per barrel. New developments should be trying to replicate this sort of standard. And this is where the bar should be set for new developments in the Gulf of Mexico or in, say, Guyana as a leading oil major tries to ramp up there. But the one that kind of excites me most of all from all the technologies we've been screening is the capability for enhanced oil recovery using CO2. So today, we get extra recovery factors out of these oil fields by flooding them full of water and flooding them full of gas. But CO2, in principle, is a much better fluid to do enhanced oil recovery. The problem is we haven't had the supplies of CO2 to actually do it at scale. And this is changing. This is changing because of combustion technologies that release CO2 much more purely so we can use it. And particularly in the Permian Basin, one of the most exciting areas, we've just been through 350 technical papers in the shale industry from the summer of 2019. On what we're seeing, shale productivity continues improving at a phenomenal pace. I know there's been a slowdown in what's being announced in quarterly earnings by companies, but this is a blip. The underlying technology gets better and better and better. And one of the biggest areas of growth has been around enhanced oil recovery. The number of papers into this literally doubled year over year. In the past, it was using natural gas. Now, most of these studies are using CO2. And I think these enhanced oil recovery processes in the Permian are going to increase oil recovery by 2 to 3 times, with a break-even below $40 a barrel. And we're going to end up sequestering around 20,000 tons of CO2 per well. And if that's right, the Permian can actually end up as the lowest CO2 barrels in the whole market. If this is right, like Extinction Rebellion should not be going around asking people to ban fracking. They should be going around asking people to do more fracking, because the fracking is going to be like the lowest CO2 oil in the market. I'm probably going to get in trouble for having said that. But this is the sort of stuff that we have to be looking at. And so if you take the oil industry as a whole, we are 2 billion tons a year of CO2 from the oil industry. And scaling up the low carbon barrels and kicking out the high carbon barrels, I think we can take out 1/4 of all that CO2, so 500 million tons. And this brings us to other industries, right? So I have this conversation with energy companies about where is their moral responsibility for driving decarbonization. And one thing I sometimes hear in the press is people say, well, oil and gas and coal account for basically all of the world's emissions, except for things like agriculture. And as a result, it's the fault of the oil companies and the gas companies and the coal companies. Now, I don't want to give these companies a free pass. These companies need to change, they need to improve. But this logic is a bit like saying all meat consumption is the fault of cows. Yes, they comprise a lot of the meat consumption, but I'm not sure the moral responsibility for eating meat rests with the cow. The same thing is kind of true of energy. So, as investors, I think we need to get our oil companies to do everything they can to lower their emissions within oil. But once that oil leaves the oil industry and starts getting used in trucks or in industry, I think we need to go to the truck industry or to the industrial consumers and ask them, what are they doing to lower their emissions? This is not something that oil companies can control. You don't go to the dentist and criticize your dentist that they're not also a cardiologist. Everywhere else in the world, we kind of allow that people sit in their silos and only control the things in their silos. And I think this is where we need to go in our sort of ESG debate with the energy industry, is that we need to have every sector. We need to start thinking, well, what is their strategy to take the emissions out and reduce them? And if we can lead the way in oil by taking out 25% of ours, then I think others will follow.
How will investment drive the energy transition?
So we're a lot of the way there now. We're a lot of the way towards finishing the decarbonization bridge. Remember, we had 80 billion tons a year of CO2. We took out 15% of it by going to renewables, 20% of it by ramping up natural gas, and 15% of it, again, can come from efficiency improvements in industry, like the ones we just talked about within oil. And we need to do that industry by industry by industry and get investors on board to drive those changes. So you can add up, we're only at 50%. So what do we do about this? And actually, this is why energy technology is so important. Because to do that other 50%, we do not currently have the technologies there ready to go and commercial to actually deliver this remaining portion. All of what we've looked at so far will only offset the growth in emissions as the emerging world ramps up. The solution that I think we need to think about is venturing. We need to get more capital flowing to bring these new energy technologies through to fruition. And we should talk about where that capital is going to come from. Where is the capital going to come from to scale up new energy technologies? Well, so we need more venturing to incubate new technologies that can actually drive the transition. And there's a huge precedent for this, because almost all of the listed energy majors have internal venture funds. In fact, when you go to these companies and you talk with them about allocating capital to renewables, something comes up again and again, which is to say, we would love to be spending more money in renewables, but we can't get the capital away. Because if there's a wind farm going to be built over here, and we just go and we outbid an Australian pension fund, and it ends up being our name on the wind farm, no incremental wind farms are built. We just end up getting a worse and worse return. And actually, this is what is happening in renewables with single-digit IRRs on some of these projects that are coming through. Instead of just trying to be followers in scaling up existing green technologies, what some of the leading companies are doing is trying to bring through new technologies that, when ready, they can really, really scale. And this is happening in the venture funds. So this year is on course to be a record year for the energy majors' venture fund investments. We should have over 50, and 60% of them have been in the area of new energies, either around decarbonization or around renewables or around technologies to improve the efficiency of their existing assets. So this is a good step, but how can we get more capital flowing into this space? And if you're a public market investor, what can you do? Because can you really go out and make a direct allocation to an energy technology? Well, probably not. One, it's not listed. Two, if it was somehow accessible, it would be an incredibly concentrated position, so it would be very high risk. Three, this requires technical expertise. Let me give you an example of that before I move on. But one of the acquisitions in one of the venture funds that made headlines recently was in an area called metal organic frameworks. What are these? These are a class of molecular level sponges that have this unbelievable surface area and tunability to separate gases. A spoonful of this stuff has the surface area of an American football field, and they can be tuned to absorb CO2 with 80 to 90% less energy than the commercially available methods today. So this is a huge opportunity to actually drive decarbonization. So ExxonMobil comes and buys a stake in this leading company that's developing these metal organic frameworks for CO2 separation. And having been through 3,000 patents around the industry this year, this really struck me. Because ExxonMobil has been researching similar metal organic frameworks in its chemicals business to separate out gases in the chemical space. And no one in the world has built more carbon capture facilities commercially than Exxon, or filed more patents around how to do them. So, if you want to understand an early stage company and is it exploring something that is going to work, imagine the ability to lean on this embedded amount of knowledge that exists within some of these companies. And this is true whether we're talking about decarbonizing gas, whether we're talking about hydrogen, whether we're talking about any of the digital technologies that are absolutely slashing the amount of CO2 coming out of the industry. We're going to develop these things much more effectively if we can lean on the knowledge base we've built up in our companies than if we tear these companies up and have to start again from scratch. The model that really attracts me is, and this is what I think every energy major should do, is offer up a listed co-investment in its venture fund. So the idea is this: raise $1 billion of capital in the public markets, and over the next few years, start incubating these game-changing new technologies that we need. And every time we invest in one, half of the money comes from the balance sheet of the major, half of the money comes from the listed vehicle. And this would give shareholders the opportunity to actually drive these technologies through that are going to earn a return, clean up the energy system, and improve the energy system so that we can meet the world's energy needs. And unless we do this, I cannot see a way to meet that other 50% that remains unallocated.
Who is leading the charge?
So which companies are leading in this area to actively drive the energy transition? Well, there's a number of ways you can look at this. I guess there were three big components in my framework. One was shifting to natural gas. And actually, the majority of energy majors have realized this. Shell, Equinor, Total, BP, this is a prominent theme in all of their presentations. The second theme is making your fossil fuels as clean and efficient as possible. And I think I probably have to call out Equinor on this example because, I mean, they have this golden opportunity, which others don't, being in Norway, where you can power a platform from shore using renewable energy like Norwegian hydro. And so this is how Johan Sverdrup starts up as a sub 1 kilogram per barrel CO2 emission field. And more companies need to be doing this. And having been through 3,000 patents around the industry this year, actually there's some great progress being made from most of the energy majors. The final point is around bringing through these next generation technologies. And we've got a big database built up of the venture investments these companies have been making. I think, personally, I've been most impressed by some of the venturing activity at Equinor, at BP, and at Shell, which is really, really focused on sort of driving some of these themes.
Exciting technologies and takeaways.
So all year, what we've been doing is we've been screening energy technologies that kind of meet these criteria: better energy, economical energy, cleaner energy. And we've been through 50. All of the research notes, all of the data, all the models are up on the website. But I'm not going to have time to tell you about all 50, but maybe I should tell you about a couple that are really interesting. This one will surprise you, but bear with me: drones. So we currently have this ridiculous thing going on as we sort of all buy 10% of all of our stuff from the internet, which is that it gets delivered in the trusty UPS truck. And statistically, what's going on here is we're delivering a 2.5 kilogram package in a 10-ton box. This is the lowest efficiency movement of stuff anywhere in the global supply chain. It's like 0.002 ton miles per gallon. This is really poor. Electric delivery drones are autonomous and reaching commercial readiness. This quarter, actually, Amazon, Google, and UPS are all trialing commercial delivery drones. I've done the equations of flight for these things. They're going to be about 95% less energy than moving something to a consumer in a delivery truck. But what's more is you think about the delivery truck, it's going to make 100 stops per day. And so if you're package number 83 during the day, you have to wait 82 previous turns in order for it to be your turn to be delivered. The thing about delivery drones, they get something to a consumer immediately. You buy it online, and it could literally land in your garden, on your roof, in your hand within 15 minutes at 95% less carbon and about 90% less cost as well. So you might think, okay, that's interesting, and we're going to take out a little bit of carbon associated with deliveries, but it's actually a much, much bigger opportunity than this. And here's how to think about it. Do you own a power drill? Statistically, you probably do. Statistically, how long have you used that power drill in its entire life of you owning it? And the answer is meant to be 18 minutes. And it kind of makes you think, wait, why do I own a power drill? Because technically, I've just paid $600 an hour for power drill services, through owning this thing, and each, 4 kilogram power drill is 20 kilograms of CO2 in order to make it. So I've built up this spreadsheet of all the things that we own, where actually it makes way more sense to rent them rather than own them if you had this delivery vector of immediate, free, zero carbon. I'll give you another example. If you live in a city, it does not make sense to own a washing machine and a dryer and wash your own clothes. A drone should take it away and bring it back clean, and it would end up being lower cost than doing your own laundry, right? And so you start going through every industry, and I've added up industry by industry by industry. I think you can take out $3 trillion of global consumer spending through moving to sharing models. This is the next leg of the internet, and this is 1 billion tons a year of CO2 saved, because you don't need, every single person to own a power drill or whatever is the item on your list.
Don't tell the Fed that sounds deflationary.
That is quite deflationary. So this is the sort of opportunity that you can see. I'll give you another one, which is turning CO2 into stuff. So where we are right now is, CO2, you can capture it industrially, but it's a waste product. You make it and just throw it in the ground. What is the return on putting something in the ground? Not a good return. What if you could make stuff from CO2? And this is starting to be a very active area of research. So think about this. Think about if you're making something out of plastic, you end up paying about $1,000 a ton for ethylene to be a feedstock for your plastic. But the price of CO2 is only $50 a ton. So if you can substitute CO2 into your materials, you can actually get a very, very material cost saving on manufacturing this stuff. And this is happening. So there are companies we've screened that make mattresses or sneakers or household objects literally 50% out of CO2. You could go and buy a pair of shoes, and rather than being a pair of shoes that cost carbon to make, it could be like a negative CO2 purchase, right? And so again, this is something that we need to bring through and have this sort of opportunity to drive the energy transition. A third one is on decarbonized gas. So today, carbon capture is so difficult because we don't really have good technologies to separate carbon dioxide from air. And when you burn gas in air, you end up with this soup of carbon dioxide in air. There are next generation combustion reactors coming through to the market which don't burn the gas in air, they burn it in an inert atmosphere of CO2 and just enough oxygen that the gas will burn. And what comes out of these reactors is a pure stream of CO2 with no further separation required. And I've done numbers on this. This is going to be cheaper to build than new gas turbines. So suddenly you can have gas-fired power cheaper than today's technologies with the CO2 immediately ready for sequestration. And if that's right, then you can go to Germany and you can say, turn off your coal. We've got an alternative that's as economical, that's zero carbon, and it's natural gas fired. And so I guess this brings me to the final point of my energy market models, which is, I have a model of a completely decarbonized energy system by 2050. Completely decarbonized. But it has treble the natural gas demand of today. It has still 85 million barrels a day of oil demand. We've basically phased out coal. But these fossil fuels that remain are just decarbonized fossil fuels, either directly or indirectly through technologies we've been screening that can do this. And so I guess this is my sort of final conclusion, which is that actually on all the technologies we've looked at this year, we can decarbonize the energy system by 2050, but it still remains a fossil-dominated energy system. And this is the final reason why engaging with leading companies in this space is going to be so important. We can't just abandon the traditional energy industry. We're going to need to work with them to make energy cleaner, better, more economical, and completely decarbonized.